will be a lot better, though, because I got Brent Woyat on the line. He's an investment advisor, portfolio manager, Canaccord Genuity Wealth Management. Brent, great to have you back with us, by the way. We're coming into RSP season, people looking around for just ideas. Give me your big, fat idea.
Good morning, Michael, and thanks for having me on your show. The big idea I want to bring to your listeners this morning is the buying opportunity we're seeing unfolding in the commodity markets in what I call the Commodity Rally 2.0. The last couple times I've been on your show in the past year, I've mentioned the buying opportunities we were seeing in the base metals and the energy sectors. And since last May, when I spoke about the base metals ETF on your show there, it's gained about 40% in value. When we look at the big picture, commodities have declined for over about 7 years, from the peak in 2008 all the way to a low in 2016. Then there was about a 25% bounce off the lows that lasted for about a year before correcting and retesting those lows last summer. However, it appears we are starting the second up leg of the commodity bull market, which is why I've called this Commodity Rally 2.0. The bull market so far has been led by industrial metals, with energy prices joining the party last summer. And so once agriculture, livestock, and precious metals commodities start gaining traction, we should see a pretty strong, broad-based move higher in commodity price indexes.
Now, are you looking at, is Canada better than the U.S.? Are you looking at, exchange-traded funds? How are you sort of investing in this idea?
There's... most commodities are traded as futures contracts, so that's not the easiest route to go unless you're a sophisticated trader. However, with the explosion in exchange-traded fund products, there's now a handful of commodity tracking ETFs that allows you to easily gain exposure to this asset class. And the ETF we're looking at is called the Power Shares DB Commodity Tracking Fund. The symbol is DBC. It trades around $16.88 a unit in the U.S. dollars on the U.S. market. And the fund's basically designed for investors who want a cost-effective and convenient way to invest in a broad basket of 14 commodity futures contracts, and it does have a heavy weighting towards energy.
Okay, and how long should I expect to hold this? What kind of framework to see this develop for you?
Yeah, obviously commodities are cyclical, and we've been in a protracted downtrend for about 8 years now. So we're coming off the bottom, but because of that cyclical nature of commodities, we would be looking for about a 12 to 18 month time frame for this trade to play out.
Okay, and that symbol is D as in David, B as in Bob, C as in Canada, DBC. That's U.S. in that. And again,
correct.
Just finally, Brett, we're looking for like an aggressive growth kind of deal here, or who's it for? What part of your portfolio? It's not conservative and it's not speculative. So what part of the portfolio do you slot this in?
Yeah, obviously due to the price volatility of this asset class, it would be suitable for kind of aggressive growth investors looking for some capital appreciation, but it would be a good addition in a broadly diversified portfolio. So, rule of thumb, is always like have 5 or 10% of your portfolio in gold. Well, you might want to have, 5 or 10% of your portfolio in a broad basket of commodity index funds.
As usual, good stuff, Brent. I really appreciate you taking the time.
Yeah, no problem, Michael. Thank you.
Brent Woyat is investment advisor, portfolio manager at Canaccord Genuity Wealth Management.